Hello, this is Solomon Davis, Right Side Trader. Today is November 22nd, 2023, and this is a quick trade review. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is actually suitable for you. This is a trade around earnings that I did on NVDA. I'll let you know this is a very, very risky trade to some. But for me, if you already own the stock or you're planning on purchasing the stock, in any case, this is a strategy that I like going to, especially when I already have the stock. I'm doing a strangle, but I already have the stock. So that's called that I actually sells. Actually is covered with my stock. That put that I actually sell is actually really covered with cash and all the way they like it. So again, I'm very comfortable doing this trade at this time, and that's kind of like the whole setup and all for it, because again, normally when you sell a put and sell a call, some brokers will allow you to do sell a strangle. Just the way it is, based on where you're selling it at, based on your account size and all, they'll allow you to do it. But some brokers will not allow you to sell, a put unless you have the stock to cover it. Sell a put unless you have the cash to cover it, and they won't let you sell a call unless you have the stock to cover it. So let's get that right up front. And on this particular one, buying 100 shares of this stock, it's going to cost you around $49,000 in order to have 100 shares to $50,000, or according to where you bought it at. You should have been able to get it somewhere below $50,000 and all. So wherever you actually purchased it in. And I'm going to be looking at this, the way I'm looking at it, I actually purchased the stock back here on this date, I believe, on the 16th. I'll take a look at the thing and all. And what I was looking at, the video was going up, and I waited for a pullback, and then I was in and all. Now, I don't sell the call and the put. I don't do the strangle until the day of the event. The event was yesterday, so that's when the options are going to be most inflated at that time. So at that point is when I want to look at selling my options, my call and my put. Now let's take a look at that right quick and what I was looking at there. I'm selling the call and the put. The video was trading right around, as you can see, $500. $499. Let me see if I minimize this. Yeah, I do it like this, but you can't see the option prices. So it was trading right around this $499. The market maker move, which I like looking at, is, let me change this up a little bit here too. Let me see if I change this. Maybe that'll do it. That's good enough right there. And yeah, that's good enough right there. So what I'll do, I'm sorry about that. I'm trying to see if I can make anything a little bit better. I'll spread this out just a little bit where we can see the numbers that we need to see. There we go. As you can see, I was selling an option that's going to be expiring this Friday and all. So that's what I'm doing, because again, this is just like I say, this is an earnings play only for me at all. So what I was looking at was the price, the market maker move, and so now using this market maker move, I want to be at least $30 or more below the current price, or $30 or more above the current price when I'm selling my option. So now at $500, that means I want to be down at $470 or less. I ended up selling at $462. That means that I'm willing to buy this 100 shares at $462 or close that position if it goes bad on me and all. That's what I have to do on the put side. and I have to have the cash. And so, if you're in a cash account, you have to have the cash to cover that. That's $46,000 that you have to have in your account, and even place this trade and all. And the thing is, you don't have to accept the stock. You probably could take a smaller loss if this thing did drop against you, just closing the position and taking the loss that you may have there at the time. If the market had dropped below your price that you sold. On the call side, let's scroll up and take a look at the call side. The call side, as you can see, I sold at a 540, 530 is where the market maker moved, and as you can see, I'm a little bit above that, so that's where I sold at. Again, now on the call side, worst case, this thing goes to the moon, and then they want $1 million from you. But that's why you have the stock. So again, if you have the stock, if the price ended up going above the strike that you sold, you just end up selling your stock at $540 a share. Now, let's take a quick look at the options themselves. I'm going to go back and maximize the screen where you can actually see something. And as you can see, first of all, the stock, I ended up purchasing the stock at $485, and I did it on 11/16. This is the paper account that you're actually looking at right here, right now. Here on the put that I sold, as you can see, I did it the day of the event. I usually trade a couple hours in the morning from 9:30 to 11:30, and then I'm done. I'm doing other things. I got to go do other stuff and all. So that's the time that I actually sold the put. So that's the call that I'm looking at right now. And as you can see, I only got $5.55. So again, that means I only collected $555 on that particular position. On the put, let's take a look at the put. The put, as you can see, right around at the same time, I collected $5.20. And again, that's $4.62. And just one contract, because one contract represents 100 shares, and that's all I really wanted to do. So that was the trade pretty much and all. And right now, NVDA is trading at, right now, this is the live market. NVDA is trading at $4.99, $500 a share. So it's going to be well within the range that I sold. So I'm looking to keep the majority of that $5 that I actually sold. And plus, I'm going to still be up on my stock. So I'll be able to close the whole position and probably make anywhere, maybe close to over $1,000, maybe close to a couple of $1,000 once that inflation that was in these options actually come out. And that's the reason why I like this thing, because after the market opens and by Friday, long as the market stays within between here, I should be able to, I can close these at 50%, at $2.50 and make $500 or so on the total trade on the options that I sold. Or I can wait and let them expire worthless and try to make that whole $500, at least maybe on one side. We'll have to just kind of like wait and see. But that's it. That's pretty much the trade there. Buying the stock and selling a strangle. But I have my cash to cover my put and my stock to cover my call. And that's pretty much it. Again, this is Solomon, right side trader. I hope this is helpful on giving you some other strategies around options. And the thing is, if you didn't have the stock and your broker allows you to do that, they expect you to close that call for whatever it may be and whatever type of loss that you're going to maybe taking. If you don't have the cash to cover that put, which they probably wouldn't let you do anyway, they're looking for you to close that put for whatever loss you may have if it goes against you. So you got to remember that. Those are the worst case that can actually really happen. But it's best to have the stock, in my opinion, and have the stock to cover the call and have the cash, and don't mind owning the stock at the level that you sell your put and all. And only trade things like this that you don't mind owning. That's all I really want to share. This is Solomon, right side trader. Hope you guys having a great week. Hope you guys have a great weekend and have a happy Thanksgiving. Talk to you later. Bye.